Hey, what's up, guys? Houston here. Back with part two of short-term loans with bad credit. Okay. So, for those of you that haven't seen part one, you should go look at that because there may be some resources there that I'm not going to talk about here to help you, especially when you have bad credit and you may not have the best income. All right. Now, here's the thing about it. There is one hidden gem in here that I definitely want to share with you all, and I'll just get it out the way. And this is with First Franklin Financial. Okay, now they're not in all 50 states. However, they not only just look at the credit score, they look at the income, and they go all the way up to $15,000. Okay, now here's the challenge with most people. A lot of times when they want to get more than $5,000, I always tell you your income has to be over $45,000. Now, the reason that I choose these type of loans and stuff like that is because they don't focus more on your DTI, your debt to income ratio. They focus more on your availability to pay the loan back. Okay, so it's not about your DTI. Now, being realistic, when you have a low income and you have bad credit, most of your lenders, they're not going to give you over $5,000. Okay. Like I said, you have to really show a strong income in order to get $5,000 or more. All right. That being said, um, also in terms of a lender, which is Money Key. Many of you may have heard of Money Key or you may not have heard of Money Key. But one of the reasons why I like Money Key is because not only do they offer the lines of credit, but they also offer the short-term loan, right? And so that with their short-term loan, um, it's $2,500. With their line of credit, it's $3,500. Okay, so Money Key could be an option for you. Now, you hear me talk about platforms, all right? And so, again, with a lot of your platforms, those are the ones that they don't do a hard pull on your credit, or what they do, they put your information out there so other people can compete for your business. All right. And one of the ones that you all heard me talk about in the past is like low credit finance. Now, the reason that they are such an interest to people is because with low credit finance, they offer loans up to $50,000. Adding to that is that you are able to possibly get a loan as low as 5.99. So their interest rates are go from 5.99 up to 35.99. All right. And the good part about it, if you have low income, if you're on government disability or government benefits and stuff, they still will work with you. So technically you don't even have to have a job. So if you're on like unemployment benefits and stuff like that, one of the things that I continue to tell people, a lot of these lenders, you do not have to have a job. Okay, you just have to show proof of a regular source of income. So that means if you're on child support, you're on alimony, again, government subsidies, that still will qualify you, okay, in order to get access to these here loans. So don't think because, oh, I don't work a job. No, it's not about that. Now, one of the key things I always tell you that most people overlook is that when you are putting that application, you need to put in the household income, not just your income. So meaning that if you have a spouse that's working, you also include their income as well. So not just your income, but your spouse's income. If you're renting out a room, you may be on government benefits. However, you may be renting out a room and you're collecting rent from that. That qualifies as income. Okay. If you're retired and you have money coming in from an annuity, some type of a pension plan or retirement account, on top of what you're doing plus your side hustle, then you have to also include that income. The reason is because that's going to suppress your DTI. Now, like I said, most of these lenders, they're not focused on the DTI. They're looking at your availability. And so the income requirements is usually anywhere from, some lenders is 500 after taxes. Some lenders, they want to see at least 1,200 after taxes. Okay, so it just depends. Now, that being said, another lender that you may want to look at is Max Personal Loans. Now, here's the thing about it with Max Personal Loan. Yes, they offer loans up to up to $50,000. But here's the thing about it. You have to keep in mind with Max Personal Loan, they deal with a lot of tribal lenders, okay? And so remember, tribal lenders do not have as much red tape to go through as a traditional bank. However, the interest rates is one thing you have to accept. They have very high interest rates. However, if you have bad credit and stuff, they have these short-term loans to work with you. Now, again, they're not in all 50 states. All right, so that's something you have to keep in mind. Now, you have Swifty Capital. Now, Swifty Capital, Swifty Credit. Swifty Capital is a separate one, but Swifty Credit, they go up to $5,000. They are a direct lender as well. And that's another thing. I usually try to find institutions that offer from direct lenders instead of farming out your information. So you also have Splash Financial that offers $5,000 also. Then you have Advance America. Okay, so with Advance America, they offer loans, and the thing about it, again, is not about the credit score. However, just keep in mind, whatever you put on the application, especially with the name and the address, this is going to be your biggest barrier. It has nothing to do with credit. Okay, let's set the credit aside. The biggest thing that most people get denied for, again, cannot stress this enough, is the name, making sure the name is matching on the application. Because a lot of these lenders, they use third-party credit bureaus. And they will tell you, yes, we use third-party credit bureaus to verify the information because they're trying to see if it's fraud, right? And so they're looking for the name, the address, if you're currently in a bankruptcy, so that way you have an idea of what it is that they're looking for. If you have an active checking account. Now, here's the thing about it. Again, if you're working like with Chime or whatever, I continue to tell you all to go over to a small credit union or a community bank and get a second chance checking account. All right. And so with the second chance checking account, that's for when you're in check systems or you're in early warning systems. Okay. And so when you're in those, banks will still allow you to have a checking account. It'll be a restrictive checking account. However, like, you can't do overdrafts and stuff like that. However, you still can use that type of checking account to actually get deposits and stuff like that. Now, another thing I have seen people ask, well, what about prepaid? Okay, so with prepaid cards and stuff like that, a lot of the lenders, they don't want to do prepaid. All right, so just keep in mind that some of them are just restricted to that. Now, here's another thing. If you're with Wells Fargo, US Bank, um, Huntington Bank, okay, and there are some other banks, they will actually give you a loan as long as you haven't had any overdrafts within 6 months to a year. Okay. Now, usually their short-term loans don't go over $1,000. Okay. And so, yes, it's with no credit check because you already have a relationship with them. You already have deposits. However, they just give you the minimum amount. So if you're just looking for a small amount and you're banking with either of those, then that may be an option for you. Now, another option you may want to check out is like Speedy Cash. Okay, so with Speedy Cash, they offer loans as well. All right, so I just like to give you a variations of different institutes. So if you go back and look at the first short-term loan video, then you would see there's a different list in there versus what I'm sharing with you here. So that way you can compile and see which one lender you want to approach. You can approach multiple of them because, again, they're not doing a hard pull on the credit. They're doing a soft pull. So you may have to do multiple. But one of the key secrets, especially when you know that you have challenging credit, is basically using a platform, because the platform will be much more flexible and stuff. That's the reason why you used to hear me talk about like Viva payday platform that offers $5,000 with the interest rates of 5.99, is because, again, being a platform, you have a higher chance of approval when you have bad credit and low income. All right. So I hope this video helps you. If you have any question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.